All right, so today we're going to do something a little different. We're going to become financial detectives. We've got this technical stock report in front of us, and it's full of jargon, it's full of numbers. Our mission? We're going to break it down piece by piece and solve the mystery of why this one stock, AST, is considered high risk. Okay, let's get into it. So, right off the bat, our story begins with this single, really powerful phrase from the report. This is not a stock that's just having a bad week. A deep bear market. That's our first major clue that we're dealing with a serious, long-term problem. This one phrase really sets the whole scene for our investigation. Now, what you're looking at here is what the report calls the stock's risk thermometer reading. And what it means is that out of all the prices the stock has traded at over the past year, its current price is in the bottom 4.32%. I mean, just imagine a thermometer showing how hot or cold a stock is. This one is basically frozen solid at the very, very bottom. Okay, so our first job as detectives is to establish the scene of the crime, so to speak. We know the stock is low, but what's the bigger picture here? To really get that, we need to look for the long-term evidence of this downtrend. And wow, this slide just perfectly illustrates the problem. Just look at the two numbers. The current price is barely hanging on at 90 cents, but the average price over the last 200 trading days? Over $3. That massive gap tells us this is not a recent dip. This is a sustained, powerful move to the downside. The stock is just completely disconnected from where it was. Now that we've established that long-term trend, it is time to follow the money trail. By looking at what's been happening with price and volume lately, we can see what buyers and sellers are actually doing right now. And our first clue on this money trail is this recent price drop. A nearly 8% fall in a single period? That's a big deal. It tells us that whatever is pushing this stock down has some serious recent momentum behind it. The sellers are clearly in control here. Okay, before I show you the next clue, and trust me, it's a big one, we need to understand our main forensic tool, the ADSCO. Just think of it like a money flow detector. When it's positive, money is flowing in. That's accumulation, or buying. When it's negative, money is flowing out, and that's distribution, or selling. Pretty simple, right? And here is the reading. This isn't just a little bit negative. This is a massive number. It indicates a torrent of money leaving the stock. So here's the crucial point. It's not just that the price is falling. The data is showing that an overwhelming wave of selling pressure is what's causing it to fall. People are heading for the exits in droves. Okay, so with all this negative evidence piling up, our next step is to check the stock's vital signs. Is there any underlying strength left at all? For this, we'll use momentum indicators, which are kind of like a doctor's tools for checking the health and the internal strength of a price move. Now, one of the most important tools we have is the RSI, or Relative Strength Index. It tells us how fast and how far the price has moved. Now, sometimes a very low number can mean a stock is oversold and maybe due for a bounce, but when you're in a strong downtrend like this, it often just confirms profound weakness. And this summary table really puts it all together. The price is below its own 5-day average. That's a bearish signal. The RSI we just talked about is weak. And another indicator, the stock RSI, is at 0, which absolutely screams oversold. But here's the key takeaway. Being oversold in a weak bearish context doesn't mean it's a bargain. It's more like a patient with a very low pulse. It's a sign of a critical condition, not a recovery. So, all this selling pressure and weak momentum, it creates a pretty clear price battlefield. We can actually see the lines of defense and attack being drawn by buyers and sellers at very specific price points. And this slide just illustrates those battle lines perfectly. You've got the floor, or the support level. This is the last line of defense where buyers might try to stop the price from falling any further. Then you have the ceiling, or resistance, and this is where sellers are pushing back, just stomping on any attempt at a recovery. The stock is basically trapped between these two powerful forces. And just to make matters worse, the report adds one final piece of short-term evidence. Based on where the stock closed yesterday, the analysis is predicting it's likely to open even lower the next day, so the immediate outlook offers no relief whatsoever. All right, we've gathered all of our clues, we've looked at the long-term trend, we've followed the money trail, we've checked the internal vitals, and we've mapped out the current battlefield. Now it's time to piece it all together for the analyst's final verdict. So let's just quickly recap the case we've built. The stock is in a confirmed long-term downtrend. There's overwhelming evidence of heavy selling. Its internal vital signs are all weak despite being oversold, and it's failing to get over even its most immediate price hurdles. I mean, the evidence is pretty unanimous here. So what happens next? Well, the report outlines two paths. For any good news to happen, the stock has to do something kind of heroic. It's got to break through that seller-defended ceiling and get back above the psychological $1 mark. But based on all the evidence, the more probable path is the bearish one, breaking below that floor at 86 cents and just falling to new lows. And that leads us, pretty much inevitably, to the final verdict from the analyst. Avoid high risk. When you look at the entire story told by the data, the downtrend, the massive selling, the internal weakness, this isn't really a surprising conclusion. From the analyst's point of view, it's the only one that fits the facts of the case. And that leaves us with one last question to think about. After seeing all this evidence of money flooding out and sellers being completely in charge, what would be the very first sign that this detective story could have a different ending? What's the one signal that would prove the tide is finally beginning to turn? That's really the crucial thing to watch for.